What's good? Listen, we did a video, or maybe two videos, I can't quite remember now. We did a video on Workhorse probably about 3 months ago. And obviously, you guys would have heard the news by now, so I'm not purporting to give you some breaking news. But I did feel that it's important to give you my personal opinion on this whole Workhorse situation, considering I've done a previous video on it. And just to kind of let you know my thoughts and feelings about why this has happened, and what to potentially do from here if you are a Workhorse investor. Just to be crystal clear, I'm not a Workhorse investor. I haven't ever invested in Workhorse. I definitely saw the potential in the company, but the valuation just didn't really match the fundamentals at the time that I was personally looking at it. And I'm going to talk a bit about that why, just to kind of give you guys some insight into the way I personally look at some of these opportunities. And obviously when the next one comes, hopefully, you guys can see different ways you could potentially approach it. Now, obviously, the news came out this week that the US Postal Service awards a multi-billion-dollar contract to Oshkosh Defense. So in the video, we talked about there's three companies that were basically fighting for this contract. You had Carson Automotive, you had Oshkosh Defense, and obviously you had Workhorse, incidentally. And the whole purpose of the USPS modernizing their fleet was not just obviously to have a brand new look and feel, but was to actually go green and be more emission free. So it makes perfect sense why Workhorse would have been the perfect choice for them. And it makes perfect sense why a lot of investors thought and felt the same thing, which is, was the driving factor of the valuation of Workhorse, increasing quite considerably over the past year, which we're going to get into a little bit more later on in this video. But what you can basically see here is that, the contract of 165,000 vehicles, 10-year plan was basically given to Oshkosh Defense. And obviously it's a 10-year contract. And as mentioned in the video, it's a multi-billion-dollar contract. Now, the thing for me, we're going to get into the reasons why. I've got my personal views on some of the reasons why Oshkosh won this over Workhorse. And we're going to get into some of that why. But let's have a look at it and let's look and see what's basically happened. So if I refresh that, because, for some reason I haven't paid for TradingView yet, which don't ask me why. You can obviously see where Workhorse was operating at. So some people had this stock early doors, like $2. So, they're not really crying. They were probably taking profit all along this period. There were some definite drops. I remember previously someone said to me, Curtis, you better get into Workhorse now, or it's going to be too late. They're going to get the USPS contract. So what you can basically see here, all of these different peaks were different times when it was rallying up towards that USPS contract announcement. And then obviously the announcement didn't happen because it was delayed. So because it was delayed, people started to sell off. Then it rallied up to an announcement again, people started to sell off. So you can see this, this pattern basically was consistent, and it was literally line for line due to the announcement pending at a certain date, and then the USPS basically having a delay in terms of awarding it to someone. Now, my personal view was that the USPS was going to do a joint award. I never thought it was going to solely go to Oshkosh or solely go to Workhorse. I felt that it's quite a big contract, and I felt that what they might do is in certain states, they might award it to Workhorse, where maybe electrification and green is a little bit more prominent. And then in other states, like Mississippi or something, Alabama, they might give it to a more stable existing organization where they can kind of rely upon. And it kind of goes into why I feel Workhorse personally didn't get it. But we're going to come on to that. But obviously, the stock was around $41, and then obviously on the news of them not getting it, it kind of dropped to lows of around $12, and then eventually closing at around the $16 mark. And then you can see right now, it's kind of risen a little bit, and I think, right now it's still around $17 mark or whatever. So that's currently the current situation. People are actually buying this stock. And in fact, one of the notable investors that's buying the stock is Kathy Woods. So you can actually see here that in terms of ARC, they were a company that invested in Workhorse. And you can see they haven't got, the world's greatest shareholding, but it is still significant in terms of the amount. It's still in the millions, which is obviously, big money. And if you go to, Workhorse's, all their institutional investor listings, you can see that ARC is like top 10. So it's still a significant amount. But you can see that they sold a few shares around the 20th and the 27th, which not really clear why, probably just a bit of portfolio management, although it's a small holding relative to their overall fund. So maybe it's not so much that. But then you can see recently here, they bought another 660,000 shares. Now, the argument could be that they're averaging down, because I'm sure if you correlate these purchases that they have done and the share prices, and you probably work out their cost base, you might be thinking that, you know what, they are potentially in the red with this position. So they might be buying more to average down their position. I doubt they know anything coming up in the future, to be honest. I think it's more just, prudent portfolio management. They might have some profits in certain other areas, average down some of your lower positions. And then obviously the share price might naturally, organically increase at some later stage in the future. But they're still potentially buying. And I know obviously a lot of investors out there from you guys are definitely buying as well. Now, the thing to note about Workhorse, which I personally believe is one of the reasons why they didn't get this holding, is their financial situation. Workhorse financially, when you look at the fundamentals, I always talk about the fundamentals. It's a paramount thing to look at anytime you're investing in a stock for the long term. And even obviously, though some of you guys haven't held this for that long, this is still from July to February this year. That's still long enough to care about the fundamentals of a specific business. And what you can see, in fact, I'm going to show it to you here because I think it's a bit more clear. This is their Q3 earnings. And so in your Q3 earnings update, they talk about everything that's going on with the business and the organization. And obviously you get a bit of an insight into their financial situation and what's basically been going on. You can see that they projected 300 to 400 vehicles to be produced in 2020, which isn't that much, to be honest. And then there's some other information we're going to get into. So the first thing to talk about in terms of their finances is the fact that sales for the third quarter of 2020 were recorded at $565,000 compared to $4,000 in the third quarter of 2019. So that's a massive increase in terms of their sales, which is great. But the cost of goods increased to 2.8 million from 1.4 million. So effectively, the cost to achieve those sales has effectively doubled. But because obviously the sales is more than double, then you would say that's a good bit of business right there. So that's not actually too bad. However, their operating expenses has increased to 6 million from 2.6 million in terms of selling, general and administrative, SG&A you might see on a financial statement. And the research and development expenses has basically stayed flat as well, which you can see here. But they're making a net loss of 84 million compared to a net loss of the same time last year of 11.5 million. And then the other key thing to note is that, there is their balance sheet. And I'm going to show it to you here because I think it's a better description. In fact, this is Oshkosh, but I'm going to go to Workhorse just to kind of show you their balance sheet. The key thing about Workhorse is their debt and their financial situation. So you can see here, I'm on Simply Wall Street, and I'm going to scroll all the way down, and eventually I'm going to get to this bit here where you can kind of see their balance sheet and their debt to equity ratio. They're not in a good financial situation when you're looking at the debt to the relevant equity. And you can also see it characterized here. They've got some cash on the balance sheet. I think their cash is now about 200 million, but they've got a high amount of debt. And I think if you're trying to get the volume and trying to service the USPS deal, I think although obviously the money that the USPS is going to give you, which is going to help you be able to do that, you still need to have your own money in order. You still need to have a certain amount. Think of it this way. If you were to uplist onto the NASDAQ, there's certain capital requirements that a company is going to have. If you're going to IPO onto the New York Stock Exchange, there's certain capital requirements a company has to have. So even though by being on a NASDAQ or by being on the New York Stock Exchange, you're going to get more money just by virtue of more people investing in your company, there's still an expectation that you actually enlist with a certain amount of money on your balance sheet and that you have a certain amount of runway, a certain amount of financial safety, which protects obviously investors and shareholders going forward. I think it's a similar thing when you look at any merger and acquisition. Typically, when a company is looking to do a deal with another company, they enter into an NDA, and then they do a bit of due diligence. And that might be a 3 or 4 month period where they look all over the operations of that company. And it also includes their finances. They need to be in good financial shape. No one's saying they have to be in a crazy amount of profit, but they need to be a financially healthy organization. And what you can find is that Workhorse isn't a financially healthy organization. They got a great product, they got a great invention, and hopefully, they can do some good things in the future with it. But you can see on a consistent basis, this is what they're estimated to do. They estimate to make, a 0.10 EPS loss, a 0.11 EPS loss on these quarters, and they're making 0.78, 1.76. So the actual surprise in terms of the losses that they're making versus what's being estimated to the ones they're actually making is a humongous difference, which you can basically see here. They're just not performing well. If I go back to this article, I think one of the things they mention, some of the issues that this company basically experienced, is that the inability of their primary battery supplier to meet their volumes due to capacity issues in COVID-related slowdowns. Well, their volumes in 2020 is only 300 to 400 vehicles. If you go back to the US Postal Service deal, this is a deal that's going to be, 165,000 vehicles over the next 10 years. You divide that on an annual basis, you're talking about, 16,500 per year. And you're basically saying that with just 300 vehicles, you're having battery supply problems. Like, this is the core thing that a company needs in order to obviously have, an electric vehicle, is having a battery. And if you're unable to meet your battery demand with 300 to 400 vehicles, you're not giving me personally, as a USPS finance manager that's looking into this deal, enough confidence that you're going to have the ability to not have that problem when it comes to 16,000 vehicles on an annual basis. And, just me giving you more money doesn't mean that's necessarily going to change your operations. If you're operating poorly with £100, you're going to operate poorly with £1,000 and £1 million. This is what people say. Like, money doesn't change you. It only just accentuates your existing flaws. So if they're not operating correctly with the money that they've currently got, and they can't keep a 300 to 400 supply of their batteries in check, then I don't think they're really going to do it that well for a 16,500 on an annual basis. They talked about 36% of their staff having COVID-19. That's obviously no fault of their own, and that's obviously something that's affected every single company. So I don't think that this is something that they potentially looked at. But this, for me, was something that was quite significant. And then just generally their financial status doesn't really look that good. These are their highlights. If you actually look at their highlights, they're not really that much highlights. You're talking about received a purchase order from some relatively unknown company. They've got a 10% stake in another company that's just done a reverse merger by a stack. That's not your business. That's just an investment you guys have made. So I don't really see that as that much of a highlight, personally speaking. A few more sales, and their target is 1,800 vehicles the next year. So my personal opinion is that I think USPS just wanted to be safe. They just felt that Oshkosh was a company that they could potentially rely on to make that supply. The Postal Service already has a bad reputation in the US. So, they're not trying to get a whole new fleet of vehicles and all of a sudden people aren't getting their post because not enough vehicles are produced, or these vehicles didn't have batteries, or whatever's gone on with them. So, one of the things that's negative about Oshkosh is that it is a hybrid vehicle. They do have ICE vehicles as well as they have an EV fleet that they're developing as well. So I think a lot of people are a bit miffed by that, and I get it. I understand that angle, but I feel that they're probably being a bit more risk averse, where they can actually say, look, we'll have a deal with a company that's got ICE vehicles right now, so we know that if they have battery issues, they can still just fill up a tank of petrol, so that's good. But they're on the transition to EV, so that for them felt like probably a bit more of a safer potential approach, which is what they're also looking at. So yeah, the financial situation of Workhorse isn't that great personally. What you can also see here is that a lot of insiders have been selling even as recently as January. So why are you selling? Like, if you're these are not the huge amount of shares, but they're selling anyway, and that's not a strong vote of confidence. But you can see consistently they've been selling their stock, and obviously who's been buying? Us retail investors, not me personally, but us retail investors have generally been buying. However, they still have a decent amount of institutional ownership. And as mentioned here, all of the investors, you can see that ARC is there, which is something that people look at. From my personal perspective, what Workhorse needs is a lot of deals. They need to just literally, I don't know what departments they've currently got in their organization, but if I was running it, I'd be trimming and only hiring business development people to sell the crap out of Workhorse and get deals in. That's the thing they need to be focusing on. Get as many deals in as you can possibly get, and secure our future. And that's basically the most important. That's the single most important thing they can be doing right now, is basically sales and development. And I think if they do that, sales and marketing, if they do that, then I think, you know, there is potentially a future for Workhorse. But at this current moment, I see why it's dropping. I think it's down another 10% pre-market. And I think it's going to be a tough time. If you are invested in Workhorse though, and you know you're losing a lot, let's say you're losing 30%, 40%, you got a few options. I think you could potentially just cut your losses, depending on how you feel about the success of the organization and in the time frame that you're looking at, and then potentially invest in something else. Because sometimes you could be holding the bag, holding a stock for a considerable amount of time. You could average down, which if you genuinely believe in a company, and I would hope that if you invested in a company, you didn't invest primarily, or actually, that's the wrong word. You might have invested primarily for the USPS contract, but it wasn't purely for the USPS contract. So you probably thought and assumed or have some information about other potential contracts in the pipeline. Then definitely consider averaging down, and obviously holding that for a longer period of time potentially. And some people might still be in profit. I don't know. It depends on obviously when you bought that stock. But I think, you know, if you are a Workhorse investor, I think the writings on the wall that it's going to be a tough time. This company is tough financially for them at this current moment, and they do need a lifeline. And until they get some good, strong deals, which I don't personally know of any that's currently in the pipeline with them, it's going to be a bit of a challenge at the moment. But, you know, I think they still have a future, potentially. I don't think they're going to completely just disappear anytime soon. But I think it's something that you're going to have to be patient and wait and see before getting some really significant returns. It did well last year, but I think this year might not be so well for the time being. Listen, hopefully you found this video useful. If you did, like, comment, subscribe. Preemarket, I'm out.